Good morning, everybody. This is Chrissy from Solstice ATR and Vulcan Capital Research. I will be covering this week for September 28th, the overall market. You can check us out on Solstice ATR and Vulcan Capital Research. At the same time, we have Axel helping us out these days in presentations. But I want to do an evaluation on the S&P. Is it ready to resume the move back up from the bottom, or do we need to go in the defensive asset, do a set, and be biased to the overall market? So, is the credit worthiness of the banking sectors in different industries going to be able to help us out? I put a list up here. I will come back to it. What I want you to do, pause the video. I put the bond market versus gold, dollar, and the small cap 1000. I put the bond market versus the large cap as well, and the S&P. I put the growth versus the bond market, in internet versus the bond market, NASDAQ 100 versus gold and VIX, and the bond market. And I put the growth RYT versus the bond, which is the 10-year note, and the 20-year as well as the 30. Keep an eye on the DXY VIX and gold, and trade what you see on the charts, not what you think. And did we find a bottom in the market? We have to do some evaluation to continue. So what I'm going to do, come now down to the S&P 500, the Russell, the NASDAQ, and the Dow Jones Industrial Average. On the weekly bar, we had a nice hammer coming back up. I can zoom in just to show you how it looks like. I know I have some Fibonacci's, and the reason behind this Fibonacci, I will move it to the 4-hour or 5-day range to show you that we had a nice rebound back up from the low to the high. We were in a linear regression channel going up. Is this down channel trend going to break out and continue higher, or are we going to reject? So let's go to the 4-hour chart to show you how it looks like. And as you can see, in the last week, we were range bound in the last 9 days. Then we eventually fell lower and came back inside that range. So what I'm going to do is zoom in from this area all the way across. As you can see, these are the last 9 days range that we had, and eventually we fell down, came back up, fell down. This is the last 5-day range, and the last week's range, down, up, side action, up market, Friday, up market. We came back inside the prior 2-week range. Is this going to continue in the NASDAQ, small cap Dow, and the S&P to take us higher in this down channel trend? And if I take this first, connect this nearest line to this one here, we broke out of that channel. Are these two considered to be a flagged continuation, or do we fall back down in this area? And that's your 200 SMA on the 4-hour. Let's take a look at the RTY. I will use the 4 hours to show you what they look like, /RTY. This is the Russell 2000. And up here, whoa. Okay, this is the mouse. We went side action for a couple of weeks, then we fell down, came back up, recovered. The Russell couldn't make a new high. We can draw a down channel this way and one down this way, which we're already trying to break out of. As we can see, I'm having a little difficulty just, seeing the screens because I'm doing the video outside. I hope I don't get distractions, from car noises. And, I'm sitting outside and not doing it in home or in an office. So we broke out of this last week's range. We fell down, coming back up. We retested the prior week and we closed inside last week's range. So in order to continue, do we continue and come back to the 1500 to get back to the 1550, or do we fall back down on the other side? So that's the small cap. Let's take a look at the Dow Jones Industrial Average, YM. As we can see on a YM, got to do the same thing here in the YM. I don't know why it's still here. You can see this is a closed cone where I connected 2 of them down here. We broke the prior linear regression channel that we fell down from. We came back and we consolidated for a week, fell down, consolidate. We came back in that range to close in it on trying to break out. We broke the first channel, coming back to the second, but the major one on the Dow was up here at the 38.250% fib and the 61.8 in order to continue higher. If not, we would look for the reversal. I'm just showing you what we can see. And one of the components that did very well on Friday was Boeing and the Dow Jones Industrial Average, and Apple tried to reverse from that bottom. Let's take a look at the NASDAQ. The 100. Why it's still on computer? I think it's something to do with toss. It keeps going, trying to take it to the other side. Okay, as we can see, we are inside that cone. We broke out of the first channel. We broke out of the first one, looking to continue higher. If we break above the 11,250, I think there's more of an opportunity because this is the down channel that we fell from prior. We had a cone. We broke down, you know, in the consolidation the week before. We fell down, came back into it, trying to push higher. If the NASDAQ 100, which is, you know, the components of the tech sector, you know, and other biotech companies and things do turn around, keep an eye on the NASDAQ to move us a little higher. So that's the NASDAQ. Let's take a look at the ES. And what I want to do in the ES at the end, break the monkey bars or the volume profile, but what same thing, similar to in the and let's just talk a little bit more in detail on this one because I have two the fibs up here, the cone that we fell down from. We were inside of a cone. This is the smaller distance from the prior week. We fell down. We closed above the 3280, as you can see, 75. We closed right above it. And the 38.2 fib, but we stayed inside the down channel, connecting this point to the nearest high, and eventually it actually met right on it. In order to break out, we have to come above it, continue higher to the backside of this channel that we fell down on a long time frame. This is a linear regression channel that's hand drawn from before. In order to continue, we need to come back up here and eventually, you know, get to the 35, 25, 27, then the 35, 55, and eventually the 3900. If we fall back down and we didn't find a rounded bottom here, I think people are fishing for the bottom, and there may be a possibility of a reversal. If it does not happen and we fall back down, look at the 3198, which is going to be a very critical area if we fall through it. In July and the June highs, you know, the 3208 is very important from June 8th. So that area we have actually cleared it. In order to continue, we filled that partial gap. If we continue, we can keep going higher. If we fall through those two areas in the 3198, look for the 3107, as well as the 3147, and the one below that is the 3068. I don't think we're going to go down there at this point. We're going to trade what we see on in the stock market, and we usually are directional, you know, on the short term, mid-term, and long term. As a day trader, you know, we look for either side, but as a swing trader, you have to look for momentum, direction, and change in trend, and this is very important, you know, things that we have to keep an eye on. Let's take a look at AAPL. I'm using the 4-hour, that way you can see on the chart why I'm doing this. As you can see here, we fell down through the channel. We're trying to break up. If this is a higher low, higher low from this one, and this one is a double top, do we continue higher to eventually break to the 50 Fibonacci and the 125 in Apple? That would be the target. If it does not, you know, sustain this down channel, then eventually it'll fall. That's Apple. Let's take a look at Amazon. All week we found some kind of a, so from that move up on the upgrade and came back down, fell back up. We are inside the prior week's low range. Do we continue to break this channel to the upside, or do we fall through this symmetrical triangle back to the downside? That's Amazon. Let's take a look at Google. As you can see, trying to get a rounded bottom. If this is higher and it's trying to break that down channel, does it continue to come back up or will it fall back down? Let's take a look at NFLX. situation as Amazon. It's in a symmetrical triangle. Let's take a look at Tesla. Over some components, that way you can guys see the setup. This is, the rounded bottom. It fell down, coming back. It has to eventually clear, in order to continue higher, it has to clear the 427, 435 in order to continue higher. If Tesla cannot sustain this, 50 Fibonacci, it eventually will fall back, create an H pattern, which looks like, this is an eye. You can see that area here, double eye. It looks like a crab, and eventually, if it doesn't make it there, it doesn't fall back down, back to the backside of this channel. Let's take a look at TLT. That's the bond market. Some stuff, as you can see, it's been side action for the last 3 weeks. Let's take a look at the VXX or the VIX. Going on. I mean, we are still in the upper distribution. We have not lost the 38.2, and this was the old Fibonacci that I have on it. We can remove that fib, and what we can do, take the nearest high and the nearest low for this last week's range and calculate the fibs on it, and I'll anchor it for you guys so you can see it. We'll zoom in here. This was the 27 right here, and we can zoom to Sunday's low, which is right here. This is Friday. As you can see, Sunday was here, which was lower. I believe this was lower because the 24.95 was set on Monday, and what you can do is anchor it to the other side, edit properties, extend for 2 days to the 20th. That's the 23rd. We go back to the 20th, where you can see the range in the last 5 days. If the VIX is going to continue lower from this wedge and fall down below the 24.95, it can continue lower, and eventually we get the bottom extensions. And if the market does change, keep an eye on what the fear gauge does in TLT. Let's take a look at GC, which is the vector. As we can see, we were consolidating for a couple of weeks, and I had called this one very well from the top, and I said, watch out on gold. This may be resetting here on this gap. We eventually fell down, consolidated, tried to go back up. People were thinking this is a flag to continue higher, and eventually consolidated for 2 weeks, and the dollar took off, and gold took a beating. And you can see from Sunday last week till the range on Friday of this week was a low. In order for this to continue, I'd like to see this gap and this consolidation here before, reaching out to gold and buying it. I'd like to see the 1788, 1762 area to go back long in gold, unless I see a change and we do, a channel coming up to this area. There's nothing till the 1900 in order to continue higher in gold. Let's take a look at oil. And oil, as you can see in the last, week and a half, it consolidated, moved up, came back inside the $40 range. It's below the 41.40 area. This is very important. This was the prior 2-week range before, it fell down, came back up inside that range. Let's see what transportation does, and I want to show you the dollar sign DJT. That's the transportation. It went down, and I'll come back into this area. We have a lot of gaps on the way up, but as you can see, this is a symmetrical triangle, 2 flat bottoms. In order to continue, I'd like to see that channel break out, go back to the 50, 61, and eventually the resistance up here. And as you can see, I anchored this week from here to this low. We are in the upper distribution. We are holding the 38.2 in order to continue higher. Let's go back to ES, and what I want is the monkey bars to see how we can evaluate the bars. As we can see, we can go to standard. We go monkey bars, and I'm going to zoom down and zoom back up, plus sign and minus sign. Okay, we can see the prior week. I'm going to take it to the left first to show you that 33, 56, and 33, 25, 27 area is very important, and the 3300. Once we come up above this area and we close in that range, because we can push higher, because we fell down from that area, consolidated 2 days. We fell down on Wednesday, came back range bound, and we had price action in the overnight lower. Then we continued higher to come back and close in the 32.80 from the prior week on Friday, which was the low of this range. And so what I'd like to see from 917, if we can continue come back above this area to continue higher, that would be a great evaluation on these stocks in the S&P 500, or we have to go defensive. This is the 5-day range. Eventually, if we can clear the 33.19 area, 26 area, I think there may be continuation all the way back up to the 3400. But remember, don't be biased to one side. If this thing doesn't hold and we end up losing the 80 back down, coming back to the 3247, 3228, and that 3198, I think the continuation would be down to the 3147, 310507 area, and eventually the 3056, 3068. Then we can continue higher because we are holding June 8th high, which is the 3206, 3205, and we came back in that range and we bounced off very nicely off the 3198 area on Thursday, and we continued higher, looking for a breakout in that cone or in that bottom. If we are bottom fishing and we have a nice range rounded bottom down here, let's look at it on a 4-hour chart again. And I'm gonna, oops, I did the 4-hour, oops, my fault. We have to change the style to candles. Standard cone with, and eventually these are the two linear regression channel. This was the break up from the prior consolidation in June. I'll just zoom into here to July. We came back in that range and we looked back up. We filled up the gaps on the way down, coming back down. If this cone continues, I'd like to see this area up here. If it doesn't hold, then we look for the bottom extension, and these are the 5-day range fib from the Sunday range, the 3326 quarter. I didn't use the 1975 because this was the Sunday's range, and this is the Wednesday's range, the low of 3198. So we're going to trade what we see, not what we think. I hope this was helpful, but I want to give you one more thing on the PowerPoint just to evaluate and show you where I'm coming up with this. Remember, I want you to pause this video, evaluate, the dollar, the VIX, and the gold in relationship to growth, such as the S&P, which is the SPY ETF, the QQQ is the NASDAQ100, the IWM. I put IWN by accident here. It's IWM, small cap Russell 2000. IWF is the 1000 Russell. In the credit of the markets and the banking sectors, did we find a bottom to continue higher, or the evaluation is wrong? On that rounded bottom, then we fall back down. So, and you look at the gold in relationship to the dollar, the small cap, as well as the bond market, and this will give you a better understanding, as well as the internet here, the FDN versus the bond and the TLT. So, and let's go back one, and this is showing you the S&P 500 weekly chart as of Friday's close. These are the levels I'd like everybody to keep an eye on. This is an 18% rate of return. If we go back higher, this would be about 14%, in this range 15%. And if things do not work out, look for the 31 SF in case the market has not found the bottom at 31.98. Trade what you see, not what you think. The chart's in front of you. So don't be biased. This is for illustration use only. As you can see, we are not a broker dealer. Past performance does not indicate future results. For illustration use only. Use at your own risk and not when we are not liable for what your actions are. Data may not be copied. I hope this was helpful. I look forward to seeing you on Discord or Solstice ATR. You can check us out. And my handle on Discord, this is my handle. If you guys want to DM me, say hi, hey, I'd like some help, you can reach out to us. So take care, be good, see you next week.